Hello, everybody. Welcome to Wednesday. The S&P 500 was up 0.3% today. I call this the day of indecision because we kind of opened up, went up and down, ended up at the same spot, actually. And not a bad result considering what happened yesterday. According to Bloomberg, you're supposed to get about a 1% jump after a 4% drop on average. We didn't quite get that jump. At least we held up there. And so really, this is just battle going on between these two groups. One group is kind of these dip buyers. When it drops, they're coming in because they feel like inflation's going to fall faster than expected. The Federal Reserve is going to have to lower rates, and we're going to be pivoting, and the market can kind of take off in that environment. The other group feels like, the inflation's going to be really sticky. It's going to have to be, much more aggressive rate increases that could create a hard landing for the economy and what have you too. So we'll see what happens with these two groups. We are kind of at this precip right now. If you look at kind of where the support and resistance is in the market, we're sitting right on top of this one level of support right now. I think if we break through that, there's not a lot of, support below that till we get down to, where we were back in the middle of June at the lows. So on the other hand, the trend is still, in the short term here, slowly but surely trying to work its way back up through this 200-day moving average. So we'll have to wait and see what happens. But again, the arguments on both sides right now are really strong. And it really came through today. If you watched it minute by minute, you could see kind of this back and forth that was happening inside the market today as people were adjusting their portfolios. Now, we got more conservative today, as I mentioned yesterday. We took, our S&P 500 portion off. Our average model portfolio right now has 44% less stock than normal. And we actually took some of the bond stuff off the table also. Again, same problems. The bond market's kind of struggling as well as the stock market. And so we're, sitting in a lot of T-bills and ultra short-term bonds right now, just kind of waiting to see if we break up here, through that 200-day moving average or break down and such too. So, but we're in a safe place. We have a big parachute already. We'll get more conservative if we have to, just because this is, kind of the market we're in right now. So look forward to seeing what's going to happen tomorrow. And again, next week is when the Federal Reserve meets. So really interesting to see what they do and how the market reacts to that. So look forward to talking to you tomorrow. Thank you.